Good morning and welcome to another 5 with Fitz. I'm Keith Fitz-Gerald. Thank you, as always, for spending a few minutes of your valuable day with me. Another shutdown deal, I hate it when they use that term, has apparently come and gone. Figures. Politicians have no skin in our game, so they continue to grandstand at our expense. Makes me sick to my stomach. Well, you know what? Two can play at that game. I say doctor pay, strip them of benefits, reduce health care to bare bones urgent care for as long as the shutdown is there, right? Or simply pull a JP Morgan and lock them all in the congressional library until there's a deal, like he did with bankers in the early 20th century to avoid a complete financial meltdown during the panic of 1907. Again, this kind of stuff has no place in our world today. It's disgusting. They're not doing their jobs, but that's just me. Anyway, and that's also enough about that. Let's focus, like we usually do, on much brighter and quite literally more profitable news. The S&P 500 has just hit another all-time high. I'm sure you can do the math just like I can. That is now $16 trillion in value and a jump of nearly 40% off April 8th lows. Once again, proof positive, something I talk about all the time. Missing opportunity is always more expensive than trying to avoid risks you cannot control. So here's my playbook today. Number one, gold and Bitcoin to new highs. It is not just the stock market, my friends. Gold and Bitcoin have now hit new highs. I hope that you're on board with at least one of them, but preferably both. Simple as that. Number two, know what you own. Just don't let it be yesterday's markets. This one stopped me in my tracks. Peter Lynch is a very famous investor who is lauded by individual investors for his visionary approach to the stock market while managing Fidelity's Magellan Fund, and for coining the often miscited expression, know what you own. Now again, this stopped me in my tracks. CNBC is reporting that Lynch said he has zero AI stocks and that he couldn't literally pronounce NVIDIA until about 8 months ago. I mean, my brain just exploded, and the takeaway here is surprising. Maybe not. Times change. I laud Mr. Lynch for sticking to his guns, but I have seen more than one hero go to zero during the course of my career. Buffett famously stayed out of Apple for years before reversing course and subsequently building Apple into one of his largest positions. Other examples over the years include Charlie Munger, who famously kicked himself for missing Google, and Buffett again, who ignored Amazon for years before realizing Jeff Bezos wasn't just selling books, he was rewriting capitalism. Imagine what Mr. Lynch has missed. Every $1,000 invested in NVIDIA just 5 years ago is worth roughly $13,722 today. A decade ago, try around $300,207. Compare that to the same $1,000 invested in the SPY, a popular ETF choice. That would be worth $2,149 and $4,014.60 respectively over the same time frame. Anyway, the investing tip here is very, very simple. Blindly ignoring the life-changing themes of our time, heck of any time, will cost you terribly over time. So it's the one thing, if you made a fortune, right, and you can't afford to sit on the sidelines like Mr. Lynch, but I don't know too many individual investors who have that latitude. So here's the point. Learn to know what you own and then do something about it. Profits can last a lifetime, but excuses are going to cost you. Now, there's an image I want you to look at in the written version of the 5 Fits today. The sixth wave. That's where we are in history. We're on the cusp of it. It is going to change the course of humanity, which is why print that out, put it on your monitor, put it on your mirror, do something every time you have any kind of doubt whatsoever or you're uncertain about what you know, what you own. Anyway, number 3, time to buy Dell. A lot of people are asking that question because Dell just raised its long-term revenue and profit growth targets. Now the company is guiding for 7 to 9% annual revenue growth over the next 5 years, nearly double the prior 3 to 4%. Now that's, of course, got plenty of investors excited, as it should. More growth plus more AI equals more headlines and more profit potential. It's a very simple equation. But, as is usually the case, that is not the real takeaway here. Dell's announcement signals a newly dawning corporate awareness, one of many. As COO Jeff Clark put it, quote, "We were all wrong about how big we thought the AI market was 2 years ago, and it's nothing but bigger." That is very profound. So the question is, should you buy Dell? It's probably not a bad choice in the scheme of things. However, here's something I want you to think about. Every time the AI trade heats up, Dell's numbers do too. Then, when the hype cools, so do the margins because hardware is a knife fight, not a moat. Dell's gross margins hover around 23 to 24%. But contrast that with two other names that have been in the news a lot lately. Both AMD and Nvidia are minting 60 to 65% margins, selling the silicon that Dell must buy to exist. Now, the situation reminds me of the gold rush of 1849. Very few miners made it big, but the store owners selling picks, shovels, and whiskey made bank. So, the Dell upgrade, every Dell upgrade, is effectively demand confirmation for NVIDIA, AMD, Broadcom, TSMC, and many other companies. So Keith's investing tip in this department is simple. Buy companies making the must-haves because the odds are better than buying companies that make the nice-to-haves. All right, number 4 today, hoodwinked again. Tens of thousands of Robinhood users were reportedly unable to access their accounts after AMD's surge sent volatility through the roof yesterday. Now, if memory serves, this is the third time in 4 years that the platform has glitched at a critical moment, if my memory, again, served me correctly. Coincidence? Perhaps, but I think not. Big market makers pay Robinhood hundreds of millions of dollars to direct customer trades through them, which means that when the markets get dicey, Vlad and his crew are going to protect them, not you. I think it's highly unlikely that Wall Street sharks didn't miss a single trade, even though scores of Robinhooders apparently did. Now, proof positive and point to think about, you didn't really think zero commissions were free, did you? There's always a cost to this stuff, right? So my POV is related. If the regulators are serious about protecting individual investors, then why are they not up in Robinhood's face with a microscope? How are there not uptime guarantees or a market-wide reset when retail traders get locked out while the institutions keep rolling? I'm just spitballing here, but asking the logical questions. So Keith's investing tip, incidents like this are exactly why I believe you can beat Wall Street at its own game. Not by playing faster like most folks think, but by playing smarter. The key in situations like this is using tactics that take away Wall Street's advantage and put the odds back on your side of the table. All right, number 5 today. This is unbelievable. AMD calls plus 65,000%. Now, Barclays just raised its price target on AMD to $300, up from $200, and reiterated an overweight rating after the company inked a new AI infrastructure deal with OpenAI. Thing is, Barclays aren't the only ones doing this either. Jefferies, Cantor, Fitz-Gerald, Wells Fargo, UBS, just to name a few. Welcome to Wall Street's favorite game, raising price targets after the stock's already run. AMD is up 92% in 6 months, adding more than $100 billion in market cap practically overnight on this last run. Then the spreadsheet gangs get bullish. I mean, makes my brain explode. Thanks for nothing, fellas. Now, meanwhile, I told you right here in the 5 with Fitz and the OBA family to buy back in April around 76 bucks. AMD is 215 or so today, up about 183%. Now, hopefully, you paid attention like the OBA family has. What's happening is as real as it gets, and dare I say it, will likely print an entire new generation of millionaires. The partnership, the OpenAI AMD partnership, could add roughly $4.5 billion per quarter in revenue by late 2026 and boost earnings by, I think, $1.30 or more a share. Now, traders, of course, went bananas when this happened. How bananas? Try a 65,000% increase in some AMD near-dated calls, according to the Kobesi letter, which posted an image you can look at in the written version of the 5 with Fitz. I mean, I just, oh my goodness, I can't wait to see what happens next. Now, by the way, AMD CEO Lisa Su says that critics are thinking too small when it comes to AI. I agree. The game is still early innings, and my assessment on CNBC years ago about AI being the largest investing theme in recorded human history continues to play out. Now, you can watch that clip by clicking on a link in the written version, by the way. Now, you know what to do, and if for some reason you don't, I'll be here with a few thoughts. I'm not going anywhere. This is personal. I love what I do, and I'd love to have you on board. Anyway, bottom line, optimism fuels innovation, and innovation fuels opportunity. Opportunity fuels profits. So, invest in optimism. As always, let's make it a great day. You got this, I promise. Thanks for watching, and I will see you tomorrow.